YouTube was up. Lace back with another video. So, as you can see from the title, this is just market structure and how I identify any trade setups that I'm anticipating to go in, or how I mark up my charts, I should say. But today I'm going to show you how to backtest off a trading view to learn your strategy, or to see how the market moves, to understand a certain pair of the market that you want to trade. So before we start the video, you can like, subscribe. I'll be dropping more content about twice a week, I'll say. Yeah, let's get to it. Disclaimer, not a financial advisor. These are just my opinion. This is my strategy that I use, what I've backtested for some years now, what I've found to work for me, that made me profitable for year 2023. You know what I mean? But anyways, don't waste any of your time. Let's get to it. So when it comes to backtesting, when it comes to market structure, we understand the market moves in three phases. That's right there. We have an impulse, correction, continuation, correction, continuation, correction, continuation. Now, the market won't always look like this. It'll never be as clean as that. Let's get that out of our heads right now. It'll never look like that. Market can sometimes look like this, choppy like this. We have to understand that market can look like this as well. But it doesn't mean that it's still not in an uptrend. This is an uptrend. This is an uptrend. So you see the two difference. This is what you call more so a trending market that's actually trending, respecting certain areas that's been broken. This is also a trending market, but it's not a clean trending market. You will have some bit of consolidation, some deeper retracements. Those are things that can always take place within the market. Yeah, people don't try to, how can I explain it? They don't try to tell the honest truth. Once again, we have to understand the foreign exchange market is one of the most liquid markets out there. Trillions of dollars gets converted each day, gets traded each day. So there's a lot of money that you can make in this market. So a lot of gurus, a lot of forex educators, a lot of YouTubers, people on Instagram, social media, wherever it is, they brainwash us. Because I was brainwashed at one point as well. And I know many of you guys are being brainwashed day by day. We look at their fake accounts. I'm not saying all of them are fakes whatsoever, but look at their fake accounts and think that, okay, the market made an impulse correction, it's going to do continuation. No, the market can consolidate, the market can do deeper pullbacks, like the market can do whatever it wants to do because we have no control over the market. We are, once again, we are called, what is it? We are called institutional traders. We are not the big money makers. We're not the banks. We're not the big investors whatsoever. We are retail traders. That's the word. We are retail traders. So as a retail trader, we try to identify and try to figure out which way the market's going to go. Are there more buyers in the market? Are there more sellers in the market? If there's more buyers, I want to be on that side to make money. If there's more sellers, I want to be on that side to make money. So we are called retail traders. Well, our $10, our $15, even our $100, as we put them as a lot size. Not what we start our account with, but as a lot size. Some trade $1 lot, $5 lot, $50 lot, $100 lot. Like those won't move. They're not going to move the market compared to the banks who's putting millions of dollars on a buy signal, or a big investor putting $15,000 on a sell signal. Like they're going to move the market. And you always have to understand technicals is a big thing in the market, but we never have to forget about the fundamentals. What's going on within this economy on a regular basis. because you can have every single setup in the book and something whack just come out of the blue. Powell could just sneeze and then say excuse me, and that could drop the dollar. Like, it's things like that you have to figure out and understand when it comes to the market. So a strategy is just, let me put in terms of this: basketball, Steph Curry, Draymond Green. We all know Steph is not going to run the ball. Draymond Green is going to run the offense. He's going to get the ball and he's going to make it look like he's going to hand it off to Curry, but at the same time when he hands it off to Curry, Curry's going to go behind him. He's going to take a screen for Curry. Same thing with Jokic and Jamal Murray does. But with Jokic and Jamal Murray, you know when he does that hand off screen for Jamal, you know Jamal isn't going to shoot that three-pointer. But with Curry, you know that's a high possibility Curry's going to shoot that three after coming off that screen if he has any kind of space. 9 out of 10 times he's going to shoot that shot. And then it's a 6 out of 10 times it's going to go in. So that's with the market and your strategy. You have a strategy that gives you a win rate at the end of not week, not month, year. Because we don't, as a trader, as an investor, as a trader, you have to look not weekly, not daily, not monthly. You can have a monthly gain, which is kind of good. Weekly, not so much, because you can have a bad week. Monthly, but a yearly gain you must look at all times. I don't want to waste too much of your time because I want to get into the video, but it's just some things that I've been seeing, that I've studied, that I've watched as with my growth, that I never liked and never appreciated it, coming from people who we spend big money on, who we was thinking could take us to the finish line or carry us over that hump. When it comes to trading, there's so many lies out there, so many people out there like lost money, having faith and trying to believe that this person is going to help them and leaving so much truth out. So there's never a holy grail strategy, never a holy grail strategy, but there is a system that you can put in place that can make you money long term, and that's all. It's just a system. The market is going to do whatever the heck it wants to do. I pray that whoever watches this video can understand that, and once you understand and accept that, you're going to be blown away. You're going to see how much you can become a master of the field. But anyways, so what happened here, right? You have an uptrend, like I said, and this is a downtrend. So you have the same thing when it comes to a downtrend. Downtrend, you can have a clean break structures, clean trend, but you can also have a choppy trend. But this is still, once again, an overall downtrend. Let's not ever forget that, right? So market structure, how to identify it as what trending market am I in? So that's always something you want to think of. Okay, the market structure right now, is it consolidating? Is it an uptrend, or like is it just an uptrend? Is it the downtrend? Like, what market structure am I in at the moment? Where there's a higher time frame, lower time frame, and that's something I will get into on a later video as well. Time frames of trading. So now I need to know, am I breaking highs or am I making new lows? Like, what is the market doing at the moment? Am I making higher highs or lower lows? Am I breaking structures or not? Afterwards, is the market respecting areas that's being broken? So that's like this example here. You have an area here that's been broken. I want to know if the market is actually respecting these areas. That's what I look for. Now, at times the market can't come all the way down here, but this will still be an uptrend because my lows hasn't been broken. But that's also kind of tricky. So that's why I say it's always a system and some rules you have to set in place. Are you a person who's still gonna look for buying opportunities even if the market comes this deep? Or are you a trader who's not gonna take that trade anymore and just continue to wait to see if you have some kind of system or trading plan, or let's say have some type of analysis that gives you this type of structure for you to take advantage of? You have to understand what type of trader you are. Now, last thing would be break of structure that's like this, or do I have a change of character? So a change of character would be, this is my last low right here. Let's say this is my last low. I need to see price break this last low here, close below it, not just wick, because wick means that the price tried to get that low but didn't. So it's very tricky now. The market is very tricky. So you want to see if price can break this. If it can't break that, then you will look to see if it can give you some kind of reaction either around this area or back to the highs, and see if you get a new low to be created that will show you that, okay, I'm actually now not in an up, I'm not in an up or buyer's market anymore. I'm in a seller's market, and I've completed the uptrend that was being formed. Now I'm in a downtrend. You understand? So those are things we have to, that I look at, that I've had the back test when I started doing my journey, my solo journey. So now for me, when I started back testing, this is how I identify any trade that I could get into. Any trade I get into, this is what I do. I look for what I look for before every trade, right? So what do I look for? Number one, I look for trending market, a trending direction. So I need to know, is this market trending down? Is this market trending up? Is the market sideways? Is the market sideways? I'm not gonna fool the market as yet. I'm gonna set some alerts now, but I'm not gonna fool the market. So now afterwards, I want to identify any support and resistance areas being created. So for me, a support area would be once price makes a downtrend, once price makes an impulse down, and once I get at least 2 to 3, I'll even say 3 or more candles pulling back up from that area, I'm considering this. I'm considering this right there a support area for me. Vice versa. So vice versa would be, if I have an impulse going up and I get about a few candles pulling back, I'm going to identify this as my resistance. Now, just because I identify it as my resistance doesn't mean that's my resistance. That's what I'm going to identify it as. Which means now, if price was to push back up out of this area, I want to see now if my resistance would act as support. So what I mean by that is, I want to see if price can pull back to this area and respect this, just like how it respected this. So this was the highest the buyers went before taking either some profits or letting sellers come in the market. Buyers pushed back up, breaking these price areas, which is also breaking this high. Now I want to see if the market makers will respect this area and say, hey, this price that I'm at now and the price that I just broke out of, I can retest that and probably get more buyers in the market. So I need to see now some kind of wick rejections showing that, okay, they don't want to actually continue going lower, but they kind of respect in this area. So I want to see some kind of respect. And then I want to see some kind of momentum candle, which we'll get into. I want to see some kind of momentum candle or buying pressure to say, okay, I could possibly come back to this area, or I can go higher, trend higher. You understand? So that's what I look for. I will always wait for breakout, which is either a break of structure like this or a change of character. So change of character would be, if I have this right here as a downtrend, this would be my last low, this would be my lower high. So what I would do, this would always be considered a zone for me. And this will always be considered a zone for me. So this would be my support, this would be my resistance. This is where the market is at the moment. So now what I want to see is if price is going to respect this area or this area. My main first area would be if price can respect this, I'm looking for more sells. If price doesn't respect this, I could potentially see price going here. And if price goes here, I'm gonna see rejection, selling momentum, where I could probably carry it back down. If not, if price breaks this, I now have a change of character, which means I was in a downtrend that can possibly become an uptrend. So from there, I'll wait for some kind of pullback to take form, whether it's at this resistance area to become support or back in for a deeper pullback. And then I would go and I would carry it higher. So, and it will start a whole new trend all over again. So those are things I look for. I use my fibs to determine how far the pullback goes, determine where my take profit is going to be. Now, most times I use my fib, sometimes I just carry it back to certain zones. I will always have my alerts set and ready. So what I mean by my alerts being set and ready, I will have an alert at this area. I'm already know I'm in a trending market. So my alert will come at that area there. What I would now do is I would want to see if price can break this area. If price breaks it, my alert rings off. Price has broken XYZ. So now what I would do, I would set another alert right back at that zone, and we'll see if price can pull back to that zone. So if price pulls back to that zone, I would get alert. Sell opportunity is sell opportunity. So with the sell opportunity doesn't mean I'm going to enter the trade, but now means that I can start to add my fibs onto the market. So I can start to add my fibs to say, okay, I have an impulse and I have a correction. Let me see how far this pullback can take me, where I can know where to set my TP and my stops. So for example, let's say now the market goes back to the zone, which will be at the 50% retracement. I'm gonna take this, depending on the stop loss and depending on how much pips it will give me with my confirmation candle. So that's another big thing. My confirmation candle, if it's too big, the bigger it is, kind of the better. But if it's too big, that means my stop loss may have to be greater, because I would still need some kind of room. I always need room. I'm not the type of trader who's going in a 20 pip stop loss, who's going in a 15 pip stop loss to get 150 pips. That's not me. I don't see that as being realistic. I call myself an investor trader, which is a trader who is trying to be an investor, which means I'm looking at the long game. I'm not looking to try to make something look good, make something look real, unrealistic. Oh, I had a 15 pip stop loss, about 200 pip TP. Oh, that was a 10 to 1 risk to reward. Like, no, I ain't with that bull. I'm gonna risk X amount of pips to achieve X amount of pips. That's gonna give me some kind of room for the market to do whatever it needs to do. You understand? Stop mind these traders out there who tell you about these 10 to 1, who tell you about these 20 to 1. Not saying that it's impossible, you can get them here and there, because some of my trades that I take, they're sniper entries. But do I get them every single time? No. I need to give and do most of my trades go and draw down? Yes. Because this market needs room. We don't know when the market is going to be ready to sell. We know when it's going to be ready to buy. You understand? So we need to always have something in place to say, okay, I'm gonna let the market breathe. You understand? So right now would be where my targets would be at the 27, and my take profit would be either at the 78 or the 88. My stop loss would usually be at the 78 or the 88, depending on where it pulled back. But I would never, I won't say never because I've done it here and there, but it's rare that you will see my stop loss at the 50 or 61% retracement, because price usually would go to one of those areas. Those are what I call my golden zone. They would always go to one of those areas majority of the time. You understand? So with that, I will also have alerts set and be ready for confirmation as well. So wait for pullback and entry confirmations. Entries and stops cannot be placed, like I said earlier, until you get some kind of confirmation. Now after that, this is where psychology and us just having some kind of common sense and knowledge, understanding and acknowledge that I don't move nor control the market, that it's always a coin flip where it can be heads or tails. If you guys read Trading in the Zone, because I'm still reading it as well, but trading is a coin flip. You can land on head 7 times. Who's to tell you that 8 times is going to be heads again? No one. You understand? As like trading, you could have a 7% win rate. Do you know what's a 70% win rate? Because what I've back tested, I'm a 78%. I'm from 70 to 80% win rate I have. But do you know what that means? It means if I out of 10 trades or any trade I take, I have a 70 to 80% chance of winning it. But do I know when a 70 to 80% chance of winning it's gonna be? No. So which means I still have a 20% chance that I'm gonna lose. Yeah, the 80%, 70 to 80% is greater than that, but I don't know when that 20 to 30% chances of me losing is gonna come into play. So you take 10 trades, you have there's a probability that you're gonna win 7 and you're gonna lose 3. You don't know which 3 it's gonna be that you lose, and you know which 7 it is. So it comes back to also risk management. I'm not gonna risk 5 to 10% of my account on this first trade because I don't know if this first trade is gonna be one of the 3 trades that I'm gonna lose. But they don't tell you that. Last thing is patience. The market will test your patience because testing mine is in my journey. And at times it still do, but not as much. Wait, either win or you lose. You have to accept the reality of it and move on. Last thing, the market is not your friend. Don't think the market care about how much money it takes from you. You have to make money, and by you making money, you have to also understand and know you're going to lose money in the process. That's business. So, all that's said and done, let me show you how I backtest. So I'm going to clear a chart right now, because it's almost, my 30 minutes almost now. I didn't even make this video 20 minutes, but I feel if I leave you guys in the dark, I wouldn't feel too good about myself. I don't like doing that. So right now, how I backtest would be, I'll go on any chart, any time in the chart. So let's go from, let's say October. Let's go from October. Let's go from November. Let's go November. Yeah, let's go November 1st. So November 1st, we will go to November 1st to we go November 1st right now, and we will go to November 30th. Right there. Okay, so this is where we're at right now in the market, right? So now, how I would back test this would be, I only use the 1 hour time frame. I go on a 15-minute here and there. I go on a 4-minute here and there, but I don't look for setups on those pairs. Always on the 1 hour. Yeah, I would always, so you have an impulse here, you have a pullback. You have an impulse here, you have a pullback. Do you have a higher high now? This would be considered a higher high because this broken close, right? You have a high high, then you have a new high there, right? So what I would do with every one of those areas, I would now identify my support, my resistance. So you're not trying to predict anything, you're just trying to see what works for you. So this would be my resistance. So my resistance always goes always to the wick, depending on how big the candles is, to the wick and most of the body. So you see price broke that, consolidated within that. This would have been an entry you could have got in. So now you have to understand where was your last low that broke these areas. So you have an impulse there, you have a pullback right there. So this pullback came to 38, and then you had the confirmation candle of this engulfing candle. So this is what I always look for, an engulfing candle that engulfs at least more than one candle. My TP would have gone to the TP negative 27 right there. My stops would have gone below, depending on my stop loss and depending on my take profit, it would have to go either to a 1-to-1 or just a 1-to-1. I don't usually put it higher or lower than 1-to-1. So right now, if this to go to the 50% retracement, I would have carried this stop loss to the 78. Because when you hit the 31 before giving me the confirmation candle, I can try and risk it going by the 61%. So that's why I would have the 1-to-1. So what I would do, I would still set an alert at around the 50% in case it do pull back, and then I could say, okay, cool. It's a possibility it might try to come to the 61. And so I could adjust my stop loss depending on if I still have confidence in this trade, and I would just put my take profit higher, because now if it hit my 61, it means that my pullback was deeper, which means it can go higher, if it makes sense. So that's something we always look at, but other than that, you would have won the trade right there, right? I always remove my fibs afterwards. I don't keep my fib because I don't like my charts too dirty. But I always leave my TP and stop loss to make me understand what I got in and whatsoever. Give back confidence. So I also trade divergence. So right now you can see that this market here was buying at us. Push, pull back, push. So there's actually an uptrend there. And this right now actually was showing sells. So that is considered a divergence for me. So I also trade that. That's the only time I'll actually go on a smaller time frame, like 50-minute. If I have some kind of small consolidation that I can think that it could possibly be divergence on 15-minute, and I would go off that. So because I'm seeing divergence now, I can have this area mark as support. And most of my divergence, I don't go in on breakouts. So my divergence will have to come where it still breaks my lows, retest, and sell. So for here, most people would get in on the breakout and they actually would have won, but I don't trade the breakouts like I said, so I wouldn't have been able to get in that trade. Now, my second trade would have been this right here, where I had a support area right there. And then I had a resistance area right here. So I have a support, I have a resistance area. So what would happen was I had to break, I would have got alert, Maceo, XYZ break, so and so. But if you look closely, I never got the retest. So this right now is what cost me early in my trading journey when I first started my backtesting, made me lost a lot of trades because I would have still been so antsy to get in trade because of FOMO, being fear of missing out. I would think the trade is going to go my direction quick and I wouldn't be in a trade, but I had to come to the realization that at the end of the day, you're going to miss some. It is what it is. Live with it. And look what happened. You had the impulse, you had the pullback, but this even finish its continuation. Let's see. Yes, it did. It did. But what's so funny is, where would your stop loss have been? Because now, look at this. This is another thing why I don't get in most trades. If my stop loss and TP isn't aligning, I can't get in it. It makes no sense me hurting my head to get in something that doesn't make sense to me. That's not gonna show me some kind of profit. So right now, at the negative 27, this would have been a 47 pip stop loss, 32 pip TP. I'm not gonna get in that. It won, but I'm not gonna get in that. I'm sorry. So that's something I wouldn't have got into, but I would still have that as a markdown. Say, okay, sir, XYZ. Now, I would have to look. This would be my new support right now. I'm gonna look to see if price can break these areas for more sells. Price pushed back up, consolidated. These candles here, these are tricky candles. Would you enter them? Would you not? Because it's actually in your area now, Maceo. So would you have entered them? No. I would have put a sell stop on them. So a sell stop means I would have put an entry about 2-3 pips away from the last candle, and then that's what I would have done. But if a candle closes bearish, like with rarely any wicks, like for example this right now, so it came out so bullish with no wicks, I take those type of candles. But if they come out with some kind of wick, I put a buy stop or sell stop. I don't just market execute them. That saves me a lot of trades as well. So right now you have resistance. I would have waited for a breakout, which I got, and a pullback. Never got the pullback. Nothing I can do about that. Now I know some people saying, "Oh, Maceo, so much opportunities you missed. Oh, you don't get no trades. It's not." The trades I get in are the big trades. I don't get in on 15 for 30 pips take profit or 50 pip take profit. I go on trades where I'm calculating 80, 90 pips, 120 pips, 150 pips. Nice, with a good lot size, good risk to reward. 1 to 2 trades that week, I'm good. And less chart time, where I don't trade every single day to catch 50 pips, to catch 30 pips, to catch 50 pips, to catch 30 pips. I can take one setup that probably I found on a Tuesday, hold that for probably either that day or until Friday, and I'm done for the week. Could have enjoyed my life, didn't have to worry about the market. Trading is supposed to be something that we are all trying to do to become financially free, where we don't have the week could get away from our 9 to 5. But most of us, it's like trading is worse than our 9 to 5. Because why? We're always breaking even, or we're in a good week, then next 2 weeks is bad weeks. We up this amount, then we down this amount, then we up this amount, then we down this amount. Then every single day, you want to chart. Every 3 hours, you want to trade. Every 2 minutes, you want to trade. Oh, I'm in a GU buy, then you close it out. Oh, I'm in a UJ sell, then you close it out. Oh, I'm in a GU sell now, then I'm in a GU buy. Like, that's not how trading is supposed to be. It's supposed to be free. Enjoy your life. Make money, enjoy your life. So, you had this big rally up. Then you had this sell down. The sell down didn't give me any structure until it made this big push. So you see how we got this big push here, but we got one candle, and then these other red candles. That is not considered a support for me. So this would be considered a support for me right now. When you have multiple candles that actually start to buy back up. So this is my support, and price came up, then dropped back down to make a double bottom for me. So now here is where I would set my alerts. So you notice price broke this last high, this last low with this wick. I wouldn't have entered this, or I wouldn't have got alerted because it never closed. So remember I told you I would wait for my candle to close before an alert happens. So I wouldn't have been alerted for that. But I would also have identified this area here as my resistance. So before anything even happened, you guys see what happened. Price finally broke out of it. Almost alerted me, because my alert would have been not at top. My alert never is in the zone, it's always on top of my zone. So this right now would have alerted me that, hey, Maceo, buy opportunity. So now what I would have done was look for a bullish candle, either engulfing candle or a nice bullish candle with no wicks. So now what I would have done, once it said Maceo buy opportunity, that's when I would have put my fib on it. So my fib would come from the impulse and to the pullback. So this right now would have been my full impulse. Now this would have been my pullback. So now I'm going to wait for some kind of opportunity to give me my continuation. But for this, you notice that it almost hit the 61. So because it almost hit the 61 before giving me my bullish confirmation, I'm only carrying this till negative 27. So with negative 27 now, I can enter off either this one or this one. So let's say this one here, and we go there. My stop loss would have been at the same 78. Because why? It already hit the 50 and almost the 61, so I could put this at the 78. So I'm risking 65 pips for 129 pips. You could say 130. So that was almost a 2-to-1 risk to reward. So I risk 1%, 2% the most I would risk on my account. So this right now is how it would have been. Sorry, let me fix this again. So yeah, this is how it would have been for me. And if you see the length of time this took, I would have ended this on a Wednesday, and I would have been out of this by Friday morning. So Monday, Tuesday, no trades. I had a breakout on Monday. Tuesday, nothing. Wednesday, I had my retest. So that means for Monday I had a breakout, so my alert hit for Monday. Okay, cool. So now I put alert to say that a buy opportunity is about to come now. Tuesday, I could chill, enjoy life, didn't have to worry about the charts. Wednesday, I got my alert. Waited for my confirmation, so my alert came at 11 o'clock. And then what happened was, my alert came at 10, then 11, by 12 o'clock I had my entry. By 12 o'clock I had my entry, so 2 hours after my alert hit, I had my entry. And from there, I could have enjoyed life. Wednesday could enjoy life, Thursday could enjoy life. Friday, this happened early Friday morning, which means I probably was sleeping and my take profit hit. So Friday come along, have nothing. Now I have a resistance area around these places. This is my resistance area here. I will wait to see if price wanted to come back to this area, which price didn't come back to. If it did, then it would have been a retest and I would have carried it to this area here. But unfortunately, it didn't give me the retest or anything. Something we can't get mad about. And then the month over. So in totality, I can say for the month of November, it was one trade that could have been taken, two trades that could have been taken, and this is just one pair. So for the month of November, this would have been 129 pips, 63 pips. So 129 plus 63. So let's say 130, 63. So that's around 182 pips. You would have caught off just GU in 1 month. Less is better. Less is better. 2 trades in 1 month. You can't beat that. They're both winners. And stop thinking about the account sizes that you have. Focus on the journey. Focus on mastering the skill set. Because the money's gonna come. The money's gonna follow. You understand? So your $10 days is gonna turn into $25 profits. Your $25 profits gonna turn into $100 profits. $100 profits gonna turn into $1,000 profits. Then it's gonna turn into 5K days. Then it's gonna turn into 10K months. Like, think of the growth. You know what I mean? But I know I've wasted many of you guys. Not wasted, but I ended up running over time. But I hope this video is very helpful. Hope you guys took something from it. Like I said, we're dropping contents later on this evening. I'm gonna drop the market forecast of what I've seen. Go back over the trades that happened last week. And yeah. So anyways, like I say, hope you guys enjoyed the video today. If you did, like, subscribe, leave a comment. Anyways, God bless you all. Guys, be safe.